Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Before we get into this fantastic, thought-provoking rip with Mark Goodwin about why we shouldn't trust BlackRock, their plan to ETF everything and tokenize the world on a universal ledger, I want to give a quick shout out to our amazing Bitcoin-focused sponsors that I use myself and recommend to my friends and family. Today's episode is brought to you by River, the preferred choice for buying Bitcoin. Why do I recommend River? Because I personally use the service and they offer zero fees on recurring Bitcoin purchases. You can dollar cost average hourly, daily, weekly, or monthly. Every Bitcoin is stored in a one-to-one multi-sig cold storage, meaning your assets are always accessible. Plus, with US-based phone support, help is just a call away. They also have this cool feature called Riverlink, which allows you to send Bitcoin via text to anyone, which can be claimed to any wallet. River makes it simple and secure to save your wealth in Bitcoin. Get up to $100 when you sign up and buy Bitcoin on partner.river.com/matrix. With Thea, your Bitcoin stays in your control. Thea's modular multi-sig gives you full control to create a setup that meets your specific needs. Cold storage with your favorite hardware wallets, mobile vaults for ease of use, or inviting a family member or financial advisor to hold your key in a collaborative manner. Support for your favorite Bitcoin hardware wallets like Trezor, Coldcard, Ledger, Foundation, and Jade. Add these devices as signing keys in your Thea multi-sig with ease. And Thea's comprehensive suite of security and recovery tools ensures you'll always have access to your Bitcoin, even if you lose a key or Thea is no longer available. Full control over your Bitcoin. Experience true ownership with Thea. Download Thea at thea.us/Cedric. That's THEYA.us/CEDRIC and get your first 6 months free and secure your multi-generational Bitcoin legacy today. Bitcoin Day on May 11th in Miami, Florida is designed to forge lifelong connections between exciting speakers and all good people anywhere on their Bitcoin journey. Bitcoin Day brings you your favorite Bitcoiners that are only seen from a distance at the big shows, and instead brings everyone together in the same room for a strategic day of vision and action. It has also quickly become my favorite Bitcoin conference, and that's why I'll be in Miami on Saturday, May 11th. Tickets are selling out fast, and now they're announcing the Bitcoin Day Miami Mother's Day special. Give your mom a gift that will last a lifetime and trickle down to you and your children. Save $75 on Bitcoin Day Miami tickets, where you could spend Mother's Day Eve with your mom, and you will learn enough about Bitcoin to fully participate in the global Bitcoin economy. Go to bitcoinday.io/Miami24. I hope to see you there, talk Bitcoin all day, and then grab an ice cold beer and a steak at the after party. This podcast, from recording to editing to marketing, is 100% self-ran by yours truly. All boosts on the Found app go directly toward making future episodes as awesome as possible for you all. Value for value. And now, let's enter the Bitcoin Matrix for this conversation with Mark Goodwin that I think will make you look twice at everything differently.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Mark Goodwin is the editor-in-chief at Bitcoin Magazine, the author of several notable articles, and the book, The Bitcoin Dollar, an Economic Monomyth. Mark is also the producer of The Living Room, and he holds Bitcoin. Mark Goodwin, welcome to the Bitcoin Matrix. How are you?
Cedric, thanks so much for having me. I'm great. Yeah. Nice little rainy Thursday where I am, and a lot happening in the world. So very excited to be here to talk about a lot of fun stuff. Thanks so much for having me.
Sure. Well, it's another day in paradise here in Florida. Sunny as usual. About 87 today. I'll rub it in a little bit. It's sort of endless summer here. But, I'm excited to chat. I would love to get into the Bitcoin dollar. We'll probably get in like tangents of that. I'd love for you to maybe send me a copy so we can do a whole show on that.
Love to,
But
of course.
I really want to focus on, your piece that you wrote with Whitney Webb about a few months back, Tokenized Inc., BlackRock's plan to own the fractionalized world. And I love this piece. And one of the reasons I really wanted to do this show, in all honesty, was in contrast to one of my recent shows with Fred Krueger, where we talked
Okay.
about maybe some of the positive sides or ways of looking at the ETF, and sort of maybe how Bitcoin could eat Wall Street. But, I think this presents a very different view. And I think it's probably more realistic, and much more grounding. So I want to get into it, and people can kind of decide for themselves what they think. But so maybe how did this piece, a little bit about how this piece come together? How'd you come to writing with Whitney, and why this topic?
Yeah, for sure. Well, I've been, and there's a couple of us, for sure, but been kind of raising hell about sort of this idea of kind of private capital kind of being the dollar stable coin sort of being this issue that we kind of have to deal with, that they're the way that the dollar system kind of works, the way institutional systems work, we really we've gotten scared about the CBDC. That's kind of where all the focus is, but really we should be more focused on the private sector. I mean, these are the people that have really done the damage. Everyone gets mad at the central bank, which of course, yeah, there's a lot to get mad about. But the most public sector ghouls are coming in and out revolving door from the banks, from the private sector. And specifically, I guess looking at BlackRock. I mean, Larry Fink is one of these guys that's just been so critical to so much what has happened in 2008 to 2020, with his connections with Trump, managing his money before the thing. So anyway, I was kind of raising hell about this stuff and was just sort of like, hey, we really got to pay attention to the private sector. Everyone's scared of the public and the CBDCs, rightfully so. But hey, private sector programmable money is not a great thing. Sort of yelling about this here, wrote a bunch of articles, put it together in this book, The Bitcoin Dollar, and kind of sent it to some people, people that had written for the magazine, some friends, and got it to Whitney Webb, who I think is just an incredible journalist. I think she's just top in her class, as a researcher and a writer, and just a truth teller. And I, lucky enough that I think the idea kind of resonated with her as someone who has really exposed the way the private and public sector are 69ing. They're intertwined, they're filleting each other basically, and very, very famously, I would say, she wrote this piece about the military origins of Facebook, and how there was this project LifeLog that was this DARPA project that shuttered the day Facebook opened, and how there was this hey, well, we can't exactly do this crazy social media network hidden behind a or surveillance network hiding behind a social media play. Let's push this into the private sector. It will be a little more palatable for everybody. So she had written kind of established this idea in my mind about being wary of these things, and so the idea resonated with her, and we just kind of started kind of pen paling about this stuff, and send each other little articles here or there. And so we ended up, she wrote a couple things for the magazine. We did a panel at the conference. And then, she reached out to me, having done a bunch of research on, basically this private sector digital dollar, kind of looking at Moonstone and these banks that were connected to FTX, and this project Fluent Finance, and their connections with like R3 and a bunch of these other kind of interoperable, Hellscape, Panopticon, private sector CBDCs, basically. Interoperable blockchains that uphold these, fiat currency tokens. So we wrote that piece, and had a lot of fun doing it. I really love writing. I mean, it's my favorite thing, researching and writing. It's easily my favorite part of this whole thing. Like, Twitter's fine, interviews are fine. Very happy to be here. But I really like the writing and the researching is kind of what gets me off. That's what gets me high. I love it. I love it, love it, love it. And she's the same way. And so, we worked on this one piece and did this kind of writer ping pong, and ended up writing this like crazy long, insane piece. And it was mostly her. She did the majority of it, the fluent finance piece. And then I kind of came in and, fleshed out some of the blockchain stuff and, talking about the Oracle problem and Chainlink and all this Google, Eric Schmidt partnered, all this horse shit, kind of more directly, in my field, a little bit less her field. So we did a piece together for Unlimited Hangout, obviously posted it on BM as well. And then, kind of did a role reversal where I had, the ETFs were launching. Everyone is just so excited about them and, just bull pumping and all these tweets going out about to the moon and all this shit. And I was just kind of like, what are we doing? How the fuck did we get here? People just really forget who Larry Fink is and what BlackRock is and how, he created like the CMO and how he was like kind of the first person to really like bring out a lot of these chopped up debt, instruments and, was really fucking with like pension funds and, American retirement money and our mortgages and Americans' homes. And so for like, this community that I thought was supposed to be this very like anti-institutional, the first people I would expect to get this just like didn't get it at all. And I'm, I've always been very skeptical about the US government, the DOJ, and even companies like MicroStrategy, like, just collecting and amassing tons of Bitcoin within the regulatory arm of the United States. I've just never really saw that as like a very bullish thing. We look at Bitcoin as this empowerment tool, but it empowers enemies just as much as it does, a global South, unbanked individual or whatever, right? And so I really immediately, this thing resonated with me is that people have forgotten their history. People have no idea who Larry Fink is. They have no idea what he's saying about it. There's a lot of rhetoric that came out immediately upon, I think it was January 11th where these 11 spot Bitcoin ETFs came out. Fink is on like Bloomberg or CNBC. And, he's talking about how Bitcoin isn't a currency and it's an asset class and how it's a storage technology for other assets. So immediately right off the bat, he's saying that I'm already got bad vibes, already know people forgot the history. I'm like, all right, I need to make sure that we remind the Bitcoin community who this fucker is, that maybe we shouldn't roll out the red carpet for this guy. And it is for enemies. And it's great that I have no ability to tell Larry Fink to fuck off and that he can stack as much Bitcoin as possible. That's great. I'm glad Bitcoin works that way. But that doesn't mean we need to be, giving him finger service under the table here while he comes in and buys up half a million Bitcoin. So yeah, that the piece kind of came out from that. It really did come immediately from those first couple quotes. I've had a lot of thoughts about this kind of transmuting Bitcoin away from being a peer-to-peer thing and having it be more the store of value asset. And, right away, that's what he's talking about. Right away, he's talking about a universal ledger. All these things right off the bat. So, I wrote up some stuff, before I did a ton of research on Fink, I kind of wrote about, where my, energy was at, where kind of emotional writing. I wrote a bunch of that, got a nice little primer, and sent it to Whitney. And she was like, oh yeah, this is great. I've actually done a ton of research on kind of green finance and these green markets. And, everyone has kind of made fun of Larry, somewhat recently for being this like ESG guy, and Bitcoiners are supposed to be the anti-ESG people. And now we're welcoming in. He didn't just suddenly forget the ESG play. So like, hey, why don't I, do some research and help you out with some of the ESG green finance stuff, the natural asset corporation stuff, all this, this shit. So I ended up kind of doing a pretty big deep dive on Larry, and she contributed, a healthy chunk on kind of the natural asset stuff, and kind of that we had a role reversal where on the fluent finance she did like 70% of it. On this one I did like 70%, and just had a really good time writing it. I mean, I think our heads are kind of in the same place with a lot of this stuff. We both think Bitcoin is very interesting and very useful, but that, it's not invulnerable to corporate capture in some ways. And it's just important to remember that these guys are very nefarious and borderline criminal, and have kind of taken advantage of the working class quite a bit, and profited off them. So they're going to do whatever they can to make a buck, and basically neuter as much as possible the ability for Bitcoin to be this freedom tool. So we are not hopeless black pilled people. We're actually quite the opposite, like very white pilled, optimistic, happy people. And we're like, let's remind people who this guy is, why we should fight, why we should push back on this stuff. And so that's kind of how the article came to be. Very proud of it. It's a lot of fun to write, and I think it resonated decently well with people. I'm sure we'll get into some more specifics here, but I think the fun thing that I really found about all this and going through it was kind of my first real experience with like the quiet part out loud being said by the person I'm researching. I mean, every time I wanted to find something about Larry Fink that was like maybe trying to like fit my thesis a little, because you begin to kind of look for, okay, well, when has he said something kind of like this? It's like he's always said it. I mean, he has so many quotes in here that are just like verbatim what I fear. And so it's interesting to me that someone like Larry would, who gets a lot of hate. BlackRock is not exactly a popular company, after the last few years, after COVID, inflation stuff, everyone kind of being like, oh, BlackRock and Vanguard, they're buying up all the homes. There was some social pushback on these guys, and yet here he is kind of coming out saying all this stuff very very on the nose. So it was really fun to do some research, to get some of the stuff out there, and then just kind of remind people who this guy is, and that I would never I guess like solicit Bitcoiners do anything crass in regards to the protocol or anything like that, but just, hey, maybe we should be weary of what's coming, and just make sure we're well prepared for what most likely is going to be a play used by these Wall Street goons, right?
Yeah. I mean, I there's a lot to unpack there, and I definitely relate to a lot of it. In terms of sort of what I enjoy doing, I enjoy the research, the reading as well, the thinking about these issues. But I am also happy to be here and talk about it because I can ask my follow-up
Totally. Yeah,
questions,
sure.
and this piece is fantastic, and there's, a lot to it. I you know, th you brought up a lot of things there that I think come out of this conversation that I want to kind of table, which is sort of peer-to-peer, block size, number grow up, and really the intersectionality with number grow up and self-custody.
Okay.
And I want to table those because I want to kind of get to know Fink more in BlackRock and what's happened here. So I'll read a few pieces, a couple short quotes and then a couple longer ones. He said, if we can ETF a Bitcoin, imagine what we could do with all financial instruments. Fink continued speaking about Bitcoin itself, stating, I don't believe it's ever going to be a currency. I believe it's an asset class. At another point, he said, we believe ETFs are technology no different than Bitcoin was a technology for asset storage. I think you mentioned that or alluded to that. And then as Fink stated in 2020, I started at First Boston in 1976. I was the first Freddie Mac bond trader. And so the mortgage market was just in its infancy. And then in 1982, we had the ability to put a PC on our trading desk. Before that, you had no ability to put a computer on that trading desk. And it was very clear to me that if we could have computing power on the trading desk, we were going to have the ability to dissect cash flows of mortgages. That led in 1983 to the first carving up of a mortgage into different tranches. And so we created the first CMO. You went on to write, Fink had started his career at a trading desk at First Boston in 1976 and was quickly made head of a division in the then unknown mortgage-backed securities market, which is estimated to have eventually added $1 billion to the firm's books. He was also instrumental in the $4.6 billion securitization of GMAC auto loans at the start of 1986 and became the youngest member of its management committee at 31 when he made managing director. After getting caught on the wrong end of then Fed Chair Paul Volcker's unprecedented interest rate manipulation in the late 1980s, his desk lost $100 million in the second quarter of 1986. First Boston made it clear that when Fink left, When Fink finally left the firm in 1988, he had been fired. Despite his difficult exit from First Boston, over the next 2 decades, Fink's new firm BlackRock would become an integral figure within the public-private merger of the U.S. dollar system. For example, in the summer of 2011, then U.S. Treasury Secretary Tim Geithner was negotiating the raise of the debt ceiling. After an agreement was made on the last day of July, Fink was the second number dialed from Geithner's office, only behind then Fed Chair Ben Bernanke. The Treasury Secretary also made calls that day to Lloyd Blankfein, then CEO of Goldman Sachs, and JP Morgan's Jamie Dimon. According to reports, Geithner called Fink at least 49 times during the previous 18 months, a testament to BlackRock's political influence. I mean, there's a lot there, but I think where I'll start is sort of the crux of. So those other pieces that I brought up, peer-to-peer, block size, NGU, self-custody, I think, and you could even talk about Michael Saylor and MicroStrategy. We get to this question of, is Bitcoin a commodity, an asset, or is it a currency? And what is that question about to you? Why do you think Fink is kind of really, of the opinion that Bitcoin is going to be this great asset?
Well, it's interesting, and I think it also plays into kind of what has happened over the last few days, interestingly enough, which is the U.S. DOJ has basically labeled Bitcoin as money. If you're going to charge people for running a Bitcoin service and saying you're money transmitting and you're money laundering, well, shit, I guess it's money. Obviously, I think it's important for us to reject that notion, which is people have sort of. I've been accused of being hypocritical on this point because I talk so much about how Fink is trying to make Bitcoin this asset class, not a peer-to-peer technology, and how it's really a ledger for storing other assets, which is what he talks about. This universal ledger where every tokenized, anything that can be tokenized, has a little QSIP, has this, tradable identifier. Everyone has a universal digital ID, and they use one ledger and they trade all these tokenized instruments on it. So he really sees Bitcoin as being this, the best ledger, the most secure decentralized settlement network. Who cares if we settle on Bitcoin? We'll use Bitcoin just to, store other assets on Bitcoin. That's kind of how I see his play with Bitcoin, using it as a ledger. Obviously, holding the asset is something that can go up in dollar value, but not really so much this peer-to-peer thing. It's not this currency. And, of course, with the Samurai, charge or allegations, they're claiming that it's money. I think we should reject, in the public sector framing, we should reject that it's money, and we should say it is a database. Bitcoin is a database. When I want to send you money, using Bitcoin, I'm not actually sending you dollars. I'm sending you a large number of a large key, whatever. And you are simply getting a alphanumerical string, and that's it. And there's no money was transmitted. This isn't money. We should fight for that framing, because I think otherwise we're going to be pretty screwed from the public sector framework, from a regulation standpoint. From what the private sector is trying to do with Bitcoin, is they're trying to use it as basically as an ETF mechanism. And so that first quote where he says, if we can ETF a Bitcoin, what else can we ETF? That first quote is really saying, Bitcoin does so much. It does, database technology, distributed database technology is very clunky. It's very slow. Coming to consensus, it's very difficult. And so, if we can reduce, the thousands of nodes across the world, the millions of ASICs, I don't know, whatever, an insane amount of exahash, 650 exahash, of ASICs, and we can reduce it down to, a paper trading, QSIP in the iShares, division on the New York Stock Exchange or whatever. If we can reduce all that down to that, then, what else can we reduce down to that? Because Bitcoin is this kind of nebulous digital credit. It's the only credit in the digital system. Everything else is debt. Dollar tokens are debt. Everything else is debt. And Bitcoin is the first kind of like digital credit. And we can reduce it to a QSIP. We can reduce it to a ticker. And if we can do that, we can do that to the natural world. We can do that to carbon credits. We can do it to all these ESG play things that, Fink has been pushing forever, to mortgages, to whatever, to human capital, even. I mean, there's so many crazy things that people want to tokenize. And this is what this guy, he really saw using, the first PC, on the trading floor, building out his Aladdin risk management system that upholds trillions of dollars. That's like the bedrock of BlackRock, is this risk management system. He was kind of the first person to really do that, and that's why they got so much money to make BlackRock, why they have done so well, why they've been so essential, to the public sector as an advisor, because they've really been ahead of everybody else in terms of analysis and statistical collection. So if we can reduce Bitcoin and all of its effort to be this decentralized, unstoppable entity, and we can reduce it to this thing, we can do that to anything else. So I think that's he's showing his domination over Bitcoin, or his attempt to it anyway. He's flaunting it. He's like, if we can ETF a Bitcoin, there's nothing else we can ETF. And it's very interesting too with BlackRock. Like they were kind of doing more mortgage stuff. And then in 2008, they didn't even own the iShares division. They bought that up when Barclays went under, and Barclays refused basically a government bailout from the UK, and BlackRock bought up their ETF division. BlackRock didn't have an ETF division, 14 years ago or whatever. And now it's like one of the biggest parts of their entire entity. I mean, ETFs became the dominant form over mutual funds and other things, or mortgage fund, all of these other games that they were playing with. ETFs have become the dominant form of speculation and investment. They're this really powerful vehicle, and so it went from being not even a part of their business to being the most important, and a very powerful tool at that. So I think the thing that's very funny too to me about, or I guess not funny, maybe scary, I don't know, but one of the arguments about why Bitcoin is better than gold or other hard money standards is that that it can't be fractionalized, it can't be rehypothecated, it can't be papered, right? There's this auditable get TXO set out. There's this way to basically check the supply at any point. We can do proof of reserves. There's all this auditable ability to Bitcoin underlying. That's what the blockchain is. It's this ability to basically audit the state of Bitcoin every 10 minutes or whatever. And so we could never have like paper Bitcoin, because they would be called out, we would know immediately. But then all these people are cheering on the ETFs, and they're not realizing, well, hey, gold is the same thing. It was this great store of value, yada yada, this great money, this state, the state can't mess with it and all this stuff. And then it was papered out, and it became this highly manipulated. A lot of the people involved in the ETFs, like the authorized participants like JP Morgan, their trading desks were charged humongous fines for manipulating metal markets. This isn't just like a conspiracy. This isn't just something I'm, making up, but it's like, like the people directly involved with the iShares, IBIT ETF, have, people working under them have been charged billions of dollars for manipulating and spoofing treasuries and metal markets. They can do that to Bitcoin. There's no reason why they can't. Yes, Bitcoin has better proof of reserve ability, better auditability, but the proof of liabilities isn't perfect. And a lot of things can go wrong. Technical errors can happen, things can happen, theft can happen in a much better, more efficient way. A rug pull can happen. So, this general idea that, Bitcoin can't be manipulated because, and it rejects sort of fractionalization, I think is not necessarily true. And we should just, make sure that the people that are setting themselves up to have, now, again, it's over 400,000 Bitcoin, right? Maybe even five. I'm not even sure the exact number now, but And between them and Fidelity, I mean, it's just insane how much Bitcoin they've accumulated in the last 4.5 months. And these are kind of known market manipulators. So, I think it's worth, considering the history of these people and knowing that, they're very like upfront about saying, yeah, we took the beast that is Bitcoin and we ETF'd it, like what's up, hey, what else can we do? They're flaunting it at us really. Yeah, I think Bitcoiners should take an eye on it and really look at it. And Fink says, it eliminates all corruption, having a tokenized system. But like it certainly doesn't. I mean, these are corruptible people that have done literal financial crimes using, these exact style of markets, U.S. Treasury markets, metal markets. Both of those types of markets hold huge, similarities to the Bitcoin market, from an ETF standpoint. And they've proven to find ways to do criminal activity there. So yeah, we should be worried about it, I think, and be ready for something to happen, and certainly not, I would say, push people towards buying, BlackRock ETFs. I think we should be very forthcoming in the risks of having a custodian. That's the whole point, again, of all this Bitcoin nonsense that we do, of running our nodes, doing all this stuff and having all these hashes go off. And that's we do all of this to avoid trusted third parties. And here we go, like creating a humongous honeypot, with a very trusted third party that is really not worthy of our trust.
Yeah, I definitely feel that, especially the last few weeks and days. I definitely think the shine has come off the ETF, at least for even Wall Street right now in retail. I think a lot back to this episode with Tales from the Crypt with Epsilon Theory, where he, I'm not going to get into the whole thing, but he really felt like they could, Wall Street could ETF the Bitcoin. I'm paraphrasing greatly there because I don't think the ETF was the conversation was about, but like they could Wall Street Bitcoin and lull us to sleep and shoot us in the back of the head like a coyote who's causing problems for a homeowner. And the coyote's pretty smart, but maybe not as smart as law enforcement. And there was a tweet today from Hodelrado, and I thought about our conversation because I've been getting angry over the last few days. I do think there's a fight here, and I do think they're trying to encircle Bitcoin in some shape or fashion. I was even listening to like Wu-Tang and Rage Against the Machine before this conversation. I was just getting so angry.
Yeah.
And this tweet by Hodelrado is, in retrospect, their playbook was obvious. Step 1, approve ETFs to defang Bitcoin. Step 2, KYC everybody. Step 3, eliminate self-custody. Step 4, tax the shit out of everybody. This is our fight for sovereignty. Stay frosty and huddle on. And it's Rage Against the Machine. Rage Against the Machine is probably like Rage for the Machine now, though, actually. And it's kind of like what the ETF is like if you're rooting for it. And I think what's, to kind of continue on that thought, I think, the thought of that tweet is that Bitcoiners are being lulled to sleep with number go up.
Yeah.
So Wall Street saying, come in the tent, you'll be happy with number go up. And there's this thought that number go up is the whole point. It's how you bring people in, and it gives power and capital to Bitcoiners. So there's this thought that that's enough, I think.
And what is the number? It's US dollar denominated number.
I get that, but that's sort of, an exchange rate. And you could say, okay, 1 Bitcoin equals 1 Bitcoin. And what I think it's really getting at, and I want to ask you though, is it really getting at, I think, they're saying here's the number go up and dangling in one hand and saying, we're going to take away self-custody in the other. So we're going to kill your Bitcoin as money, whatever you think about it, whether it should be a currency or P2P or, all these things. Because I think money is all three at once, but they're trying to kill its use case as maybe P2P or MOE and saying, hey, you can use it as an asset. We definitely don't want you to use it as a unit account. But what I think what also happens here, if you bring it all on the Wall Street tent into the ETF is, people aren't self-custodying, which limits Bitcoin liquidity in circular economies and its ability to be used as P2P and be settled on a base or even a second or third layer, maybe. And is that what is really happening here? Is that sort of the battle that they're just trying to completely neuter Bitcoin and like say somehow turn it into like a real like a digital gold where they can paper it and financialize it and mess with the price and maybe even mess with the price go up. Maybe that's what they want. So that again, people are super happy and not thinking about the other things. It doesn't have to be an attack like we've seen before. But is this kind of where you're
absolutely where I'm going? And I think to that last point, I actually I get more nervous now when Bitcoin goes up because it makes me feel like the regulatory moat is ready. And that's sort of something that I said the last few months. I'm like, hey, listen, I'm not trying to be a doom pillar guy because I'm not. I'm a happy, lovely guy. I love the world. I love humans. There's good humans. But I mean, I think that they've kind of prepared Bitcoin. Let's just be honest. All the things we think about the dollar are true. I mean, the debt service is outpacing, the growth of our GDP. I mean, the U.S. is a zombie company. You would never invest in it. We need to print more money than we have to service our debt, or than we make to service our debt. So the U.S. dollar is in serious crisis mode, and we're going to print trillions of dollars. That's something that's been said, and even something that's been said by stablecoin provider issuers like Walter Hessert, the head of strategy at Paxos, said this. He's like, I believe there will be trillions of dollars of highly regulated stablecoins. Well, then what does that mean? That means there's trillions of dollars of US debt being printed. There's no other way to look at that. That's how it has to be. You can't make, dollar instruments without dollar denominated debt being sold by the Treasury and the Fed, right? So I think, yes, I think that they have a use case for Bitcoin to be basically this demand inelastic heatsink for printing a bunch of money and having a place to shove dollar denominated debt. And if they allow Bitcoin to be able to be used, in a self-custodial way, they'll make a bunch of millionaires and billionaires, and a bunch of self-sovereign people that maybe they don't want to create all those entities. They don't want to, basically, spread around, the appreciation, and holding a hard asset during a hyperinflationary moment. They want to really capture that for themselves. So I think it's not really that surprising that we've seen growth in dollar denominated appreciation as, huge amounts are being accumulated by the U.S. The U.S. has over 1 million Bitcoin easily between the DOJ and now these ETFs, easily. And so, I think there is a concerted effort by the public and private partnerships that kind of make up the United States and the U.S. dollar system. These banks, these institutions like BlackRock, and even the regulatory arms like the SEC and the Treasury and the Fed itself, to limit the ability for Americans to self-custody Bitcoin and to really push them towards dollar-denominated tokens that can, they want Bitcoin to scale via stable coins. I think that that's generally pretty. I mean, we saw today Stripe came out and said, hey, we're bringing crypto back. And by crypto, of course, we mean USDC. And USDC, of course, Circle in spring 2022 was, led a $400 million round, or that BlackRock led, as the primary asset manager for USDC cash reserves. And that's interesting. I think that's
who made
telling.
The announcement? Which company?
Stripe came out today and said, we're bringing crypto payments back. It's USDC. We're seeing, Howie Lutnick, who's the CEO of Cantor Fitzgerald, coming out and being like, stable coins. There was literally a chain analysis conference. I think it was last week, a week and a half ago. And he's up there talking about how the dollar system needs stable coins because it needs someone to buy this debt. They're going to issue trillions of dollars. Who's going to buy it? Tether itself has $110 billion of US treasuries. That's a tenth of China. If China has $1 trillion, right? I mean, that's insane for this tiny company that has barely any employees, and they're accumulating this huge amount of dollar denominated debt. And I think that's going to get even crazier going into, this quote unquote election year, what all this craziness that's probably coming. I think it's pretty safe to say that, they're not going to be able to service their debt with taxes. They'll definitely try to take a lot of taxes if there's an extreme appreciation in an asset like Bitcoin. You better believe it. But there's no way they can service the debt, even with Bitcoin going up a bunch and them taxing the shit out of it. No way. So they need to print. They need somewhere for that money to go. And they basically need, an instrument to quantitatively ease into. That's kind of always been the game. That's what a lot of this stuff was in 2008. A lot of the stuff in the 90s, it was deregulating the public sector to let the private sector get bigger and bigger. We saw Citigroup, we saw Glass-Steagall be dissolved. We saw more and more ability for insurance groups, for mortgage banks, for all these different types of financial instruments to come under one roof and go across state lines and become bigger and bigger and bigger, too big to fail, and then be backed by taxpayer money. When everything pops, the government has to go and print out, at first billions of dollars, and now it's been trillions, trillions printed under Trump. And so here we are, at kind of the precipice of another time where, eventually we're going to need to print a bunch of money. We saw with the COVID stimulus, right? We had the COVID lows of 3,500 or something, and then we 20x'd in a year. And coincidentally, that was like 6 weeks, I think, before the halving. And that halving was really important in 2020 because it was the first halving of relative issuance where we went below the 2% target of the US dollar, and we went below or we went about to what gold is coming out of the ground. We were at like 1.8%, relative issuance, something like that. Now we're half that, and that just happened 6 days ago. And now we're seeing the regulatory arms of the US moving again. I don't think it's a coincidence that, these big moves in Bitcoin are happening around the scheduling halving of issuance. These are money is basically volatility and an expression, of volatility between two parties. It's sort of this, you can't really have it without having the opposite, you can't really have credit without having debt, right? And same with the way these yields work. And by, bringing the relative issuance, cutting it in half, below gold coming out of the ground, well below the inflation rate of the dollar, especially in a super high inflationary, moment, you're going to see capital flow to Bitcoin, and the ETFs front ran all that. Here they got, they're half a million Bitcoin. Now issuance halved, and now they're, taking away the ability for citizens to self custody, to exchange. That has huge effects on miners, on miner centralization. There's so many things just happening in Bitcoin right now, and the idea that it's not related to US dollar policy and the economic policy of Bitcoin, I think, is a little crazy. Like, of course it is. We've seen it happen in other halving cycles before. Hell, you might even be able to say that, a lot of the COVID insanity, so much of this, there was so much distraction about everything, so much misdirection, even, as non-vaccinated person myself, like, even the vaccine discourse was pretty insane. And maybe a lot of it was to make us forget about the lockdowns and about all the printing, because no one ever talks about that with COVID. We talk about, losing family and, are you on this side or this side? Are you blue or are you red? But it's like, well, no, both sides, everybody, Ukraine, Russia, Israel, Palestine, the United States, everybody shut down all together in lockstep everywhere in the world. And we blew out the debt and we stole all of our money from our grandparents and all the future from our grandkids. And we're stuck here talking about, clots and rapid cancers and all this shit. It's like, well, hell, maybe it's all fucking horseshit. And it was just to get us to distract from them printing trillions of dollars right before the halving, and then at 20x's. And then, of course, you start to look into the FTX collapse and all that. And it gets very spooky that a lot of these similar players, these dollar players, dollarizers, that could be a whole other podcast, I think. But yeah, I think that there's something really to be said about, they want to limit Bitcoin's accessibility to all of us, and force us on these, controlled rails. And Bitcoin has that issue kind of already, unfortunately, with its block size, right? I know that's something you wanted to get into, but, from the get-go, how and Satoshi we're talking about, how Bitcoin basically needs to scale with financial services. The block size probably can't service, 8 billion people, in using day-to-day transactions. But there's a reason why we want to have a smaller block size, and we want to keep the auditability and the cost of running a node low. And this block size, limits the UTXO set growth. So there were reasons for it, but we need to figure out ways to scale and I think it's our responsibility as Bitcoiners. Like, if we have a responsibility, it's to just keep Bitcoin as permissionless as it was when we got in. And I think that this is the biggest year, the biggest fulcrum, the biggest opportunity for that to not be true than it really ever has. You got in 2013, hey, it's 2017, things are getting a little weird in the block size war, but for the most part, it was still, there really wasn't, it wasn't, no one was having issues kind of, making transactions and them being decently cheap. And, there was block space to go around. But like, we're really getting to that point where, that's probably not going to be true. We're not necessarily ready if a foreign currency fails. If a billion people want to move on to Bitcoin tomorrow, good luck opening a billion Lightning channels. And that's just for one thing, never mind 2-3 Lightning channels per person or whatever. So, we're hitting that fulcrum where fiat currency is all fucked up because of COVID, free money policy stuff. The US tightens faster than ever, pumps up rates faster than ever. In the same way that Fink got caught in the late 70s, in the 80s with Volcker's, crazy rate change, the fastest, that went up to fastest for the time, it went up, 10%, over 10% interest rates, before the Plaza Accord, which was just, coordinated central banking. We saw that, in the last 18 months, 2 years, we saw, Powell jack up rates faster than ever in history at a faster rate, only up to 5.5 or whatever, but still, really fast. And that breaks a lot of things. That breaks the yield curve, breaks bond markets, and breaks kind of foreign exchange rates. So, the dollar is over levered against itself, but it's over levered against every other currency. And then Bitcoin plays this very important role where, I argue in my book, the US dollar system has so much more to gain over Bitcoin appreciating than it does over it going to zero. And I think Bitcoiners need to wake up to that and be prepared and see that the dollar players are moving into Bitcoin at an uncomfortable rate, an inorganic rate, you might say.
Yeah, there's a lot we can go from there, and I'm going to try, but I want to really get into these dollar players. So one, I didn't know this, and you wrote, before entering the White House, Fink had helped manage Trump's finances. And after a 2017 meeting with his administration, made note of his previous relationship by stating, in every meeting we had, he talked about doing more. I didn't think doing more meant being the president. And then it's no surprise that Fink kind of brought into the fold during, Trump's administration, rolling out a lot of the public-private partnerships during COVID. You went on to write, the biggest players in the United States dollar system are all but clamoring over each other to offer such products to their retail customers. Understanding that this axiom neuters Bitcoin as a viable currency capable of competing with the day-to-day bargaining and settlement utility of the dollar. There are many reasons to believe the US dollar system has much to gain from a dollar-denominated appreciation of Bitcoin, but significantly less so if the protocol itself is capable of serving the everyday transactional needs of billions of people, billions across the globe. And this is where, and I got a little confused when we were talking about the halving in 2020 and the pricing there and the action from 3,800 to around 69K and the halving now. And I got a little bit of maybe the news and sort of the narrative, and there's sort of they're going to take the fight at those points to kind of suppress price and sort of suppress maybe the natural momentum of Bitcoin during those periods of time. But what I also get a little confused about, because the question I have in hand is, how does the US dollar system benefit from a dollar denominated appreciation of Bitcoin? And, and what you just said, I want to buttress that up from what Hamalongo's thinking is a little bit on the line of take everything you said, fine. But, Bitcoin is being brought into the American tent via Wall Street. It's being sort of signed off on. And Bitcoin is being brought home, quote unquote, at Wall Street, but that's in Americans' 401ks. Presumably. And sort of when the world went from, different banknotes to, or from really silver to gold, and some societies benefited from choosing gold earlier than others and not staying on silver, that this is in a way maybe America winning and bringing Bitcoin home and moving to a Bitcoin standard. And if that price appreciation of Bitcoin does maybe two things, and this is where I'm trying to, maybe this is the question. On one hand, you're okay, we're going to print all these stable coins. We're going to sell all these treasuries. We're going to inflate the price of Bitcoin. It's going to save the dollar in some way or help the dollar. But it also helps if Americans are invested on the other side of that proverbial coin with Bitcoin in the ETF, they get to get the hard asset at those higher, price purchasing power. You bring that purchasing power home, and it helps sort of Americans maybe on that footing. But if and then there's like that third pillar of if all this neuters Bitcoin, right? But there are three separate questions. Like, is the U.S. trying to export the negative to Bitcoin and use Bitcoin as a tool to help the dollar? Does the Bitcoin price appreciation help Americans if Americans have Bitcoin in any shape or form? And both those things somehow neuter Bitcoin and make it, not a currency, but an asset. I don't know how you want to answer that, but
the neutering part is the confusing part because it kind of depends on what axiom you mean by neuter. And that's where I think the number go up stuff is really important because, of course. I mean, I think folks like you and me and, our 10,000 friends, on BT or whatever that have self-custodial Bitcoin that, maybe is out of the purview of kind of controlled on ramps, and we can kind of use it in a barter system or something like that. And we can kind of circumnavigate these surveillance systems that are being brought up. But, if Bitcoin, appreciates greatly and it becomes this highly taxed, highly surveilled system, which again, an open ledger kind of lends itself very nicely to be that. And I'm sure some conspiracy people, again, which I sort of am, but, some people would say that, hey, that's why it was designed that way, wake up, whatever. And I think ultimately it doesn't matter who created Bitcoin, obviously. I think, of course, there's this incredibly high chance it was some sort of intelligence or whatever, but I don't think it even really matters. It is what it is. And, the math is what it is. And we should really think about it that way. But yeah, I think the appreciation of Bitcoin within their within their surveillance and system, they'll basically force people on through the appreciation, the dollar denominated appreciation, to their other rails that they want us to be on. They want to create a QSIP system for identifiers for everybody. They want to create this universal ledger to basically, no pun intended, based on the program we're talking on, but kind of create this matrix for, for us to be locked in on. And Bitcoin serves itself, unfortunately, decently well for that. So Bitcoin goes up a bunch. The U.S. is able to service their debt by printing trillions of dollars of stable coins and in the treasuries to that, yada, yada. Bitcoin appreciation goes up. Anyone holding Bitcoin on their books, they change capital requirements. They usher in this Basel III requirements, and they say you need to hold $1 for every dollar denominated value, in gold or in Bitcoin. They pump Bitcoin up like crazy. They increase worldwide demand for dollars everywhere. Anyone that's trying to, get out of the purview of the dollar system, but wants to play in the United States and get access to now all these billionaires or whatever in the United States, they have to play by the rules of the regulatory bodies in the United States. You want to be a financial service that, plays in the U.S. sandbox. You better hold those dollars on your balance sheet to counteract your suddenly, 7-figure Bitcoin, right? So it's all about creating dollar denominated, capital, and making these liabilities, everywhere, basically come under the rules that the regulatory arms want to enforce. So how does that factor into neutering? Well, yeah, I do think that if they create, very controlled on and off ramps for Bitcoin, with very high AML and KYC requirements, and very high tax rates, and you got to take a selfie, 3D selfie of your face with your iPhone 13 to sell your Bitcoin and get some USDC in your account to pay your your toll or whatever for walking over a bridge. And the biometric cameras scan you and they know that that's who you are and you owe this debt and whatever. They'll create all these incentive structures through the appreciation of Bitcoin, get you onto their systems for you to be able to actualize it. And then they'll clamp down really hard and basically increase the price of everything else, still price you out of everything, but you have all these dollars. Yeah, I mean, if you can't exchange it in a peer-to-peer way, that neuters a lot of the fun of Bitcoin. I think it neuters a lot of the ability for us to circumnavigate trusted third parties, which is kind of the point of this. And if it's being used as this asset to back private capital creators, you look at a model like a Tether or something that can take the yield that they generate from buying treasuries in a high interest rate environment, and they're buying up Bitcoin, hand over foot, and buying up mining rigs and investing in mining companies, and they're doing this all very much so under the purview in the United States, and they've onboarded the FBI and the Secret Service onto their rails to blacklist addresses that they don't want that the FBI doesn't want Tether to service. You'll see more of those types of things. Bitcoin has gone up considerably in the last few years, and we've seen now multiple coders in the cryptocurrency space in general be arrested for providing services that are basically just mixing numbers around. You know there's a lot of ways that you could argue that kind of the libertarian ideals of Bitcoin are harder to come by now, because there's a lot more. How many more people are going to be afraid of coding privacy tools, mixing tools, a lot of the things that make Bitcoin fun to do things on the internet with. I think that they're creating an environment where those people are going to be really scared to create those tools in any sort of public facing way. That neuters the ability of Bitcoin being a freedom tool, if everything is under the purview of the FBI, right? So yeah, I mean, it kind of depends on what Bitcoin is to you. If Bitcoin is a tool to circumnavigate trusted third parties and remove the ability for the for the state to debt pardon, you might become really rich in US dollar terms, but you might not actually get those things that you're really hoping for out of Bitcoin. And I know that sounds kind of downerish, and I'm not, because I really think Bitcoin can still be used, currently, and can still be fought for. And there's a lot about Bitcoin that just has nothing to do. Like, that's kind of, there's like a myth about KYC in this weird sense, where like KYC doesn't exist on Bitcoin at all. You could argue that you hold on to your Bitcoin longer than the IRS can hold on to its real estate and its electricity bills or whatever, and maybe over enough generations your Bitcoin outlives the IRS or whatever, or outlives whatever third party system is trying to track your Bitcoin. That's obviously possible, but I think in the short term they're going to make it really difficult to exit your value from the system, if you want to be able to take even a little bit of it out. Like, that's kind of a problem now for a lot of us, right? Or a lot of people that have been in it for a long time, and I haven't necessarily, but you want to peel off a little bit of your Bitcoin if you have it all in a UTXO, or you all got it from the same exchange, and you want to go bring it somewhere, and you can't like find somebody to just sell it. Back in the day, local Bitcoins or whatever, maybe you can't do that anymore. You can't just get someone to hand you $5,000 in cash and give them a couple of Bitcoins or whatever. You have to peel off, a big chunky thing. And, now all of a sudden, a chain analysis sees a wallet that hasn't moved in 8 years, peel off a little bit. And, it makes it harder and harder to access your funds. It's almost, in a weird way, the responsibility grows the more it's worth. And it becomes almost a burden in this weird way, when dealing with trying to create any sort of financial privacy with your Bitcoin as it gets bigger and bigger. So I think that's a part of the warning system here. It's not that the war is over and fuck it and it's all over and BlackRock won and Wall Street's won. It's like, no, but we need to be prepared for what this could look like next, and do things now, just like we should teach people to do UTXO consolidation when fees are low. We should teach people to do kind of basic due diligence of privacy, and obviously self-custody. And Bitcoin is sort of a responsibility to do all these things in a self-custodial way. And that includes any sort of financial privacy and any sort of circumnavigation of the panopticon that is the state. You got to do it very with very intelligently, very smartly, with the right tools. And even then, it's a bit of a good luck. So I think it's just important to talk about the potential of where we could go, and how these people could, use it as a lever of control. And just because the number goes up doesn't mean the freedom aspect of it and the ability to circumnavigate the state goes up. In fact, it might actually make it go down.
Yeah, I mean, it reminds me when I came into Bitcoin in 2017, the block size war is very confusing because there was a lot I didn't know about
Same, yeah.
the whole area. I mean, you learn about Bitcoin, but then you got to learn about these other coins. You got to learn about blockchain, cryptography. It was all new to me. And I can't imagine what it's like maybe to come in now, because even like then, you got a roaring market. You think it's this great thing, but you're like, I don't know if this thing is as good as the other things or what the arguments are about. And, I think what's very difficult also for people is like, you might think that you hold positions of, you agree with people who think A and B, and then maybe hear a conversation like this and you change your opinion on B, and you're like, does that mean I have to change my opinion on A? And does, because of maybe first principles thinking, and what does affect this, or like, what did I think I understood and felt like, and now that I hear this completely other topic, now that I think about it, because I mean, there's, we were talking about here, block size, scaling, ossification, currency, asset. I mean, it's a lot of different topics to think about. What I think is also interesting is Larry Fink, I think, is sort of primed for this moment and the topic we're about to talk to next. I mean, he goes back to CMOs and slicing up, dicing mortgages. He understands how to chop up and sell assets. He really understands sort of store of value there and what happened with mortgaging and housing, I would think. And I studied and created CMOs in college and, early in my finance career. And like, it's a very sexy product for a very boring thing in a lot of ways. And, he goes on to buy iShares from Barclays for like $1.3 billion, I think. I mean, like nothing, like change basically. And because Barclays didn't want to take a bailout from the UK government, I mean, think about the irony there, right? So he gets the world economy. They're now BlackRock's the largest money manager in the world, right? And so he really gets ETFs. And so he gets this public-private partnership. And, puts Bitcoiners, and Giacomo Zuccomo at the launch of Ocean did this presentation on sort of, the decentralization of Bitcoin. And, you can have sort of like, you could be on pure hopium on one side and be like, dude, number go up. All I got to do is stack sats. Like, I don't have to care about life, being productive, any of these arguments. It's all going to be roses and glorious. And then you have sort of like the doomers who are like, dude, it's not going to work out. I mean, all this just sounds like death by 1,000 cuts and we're up against Goliath. And then you have like maybe the people in between, maybe the 10,000 of us on Bitcoin Twitter and our friends who aren't on Twitter, who are doing something or trying to do something, right? And contributing, right or wrong. Because I think there's people out there, really smart people that, if we looked at 10 issues tonight, maybe you're right on 7 or 8 of them and wrong on 2 and 3. And so that's where it gets confusing.
Sure, yeah.
Because you might agree with 4 or 5 of that, and they might be learning, and they might change their opinions, right? Or just be flat out wrong on some things.
Sure.
Or just biased or stuck on something. It doesn't mean everything they're saying is wrong.
Well, it's funny you bring up Giacomo because it's like, he has me blocked. Me and him have different ideas about, if people should be able to put data in Bitcoin transactions or whatever. But I'm sure we agree about like 89% of all things involved with Bitcoin, probably even like 95%. But these couple things that we like,
but this is
really
also
disagree upon.
We're
right?
flying a plane at 30,000 feet right now. And so like any tinkering we do to the 8% we all don't agree on, like is sort of like really material. Because the plane's not like Ethereum where they're like, we're gonna get the plane off the ground one day.
Right.
And we have this future
yeah.
vision of what we're going to be, and we're not there yet. And everyone just knows that whatever breakdowns we have, it's okay because we're not at 30,000 feet yet, because we're not where we want to be. And it really colors sort of the conversation that like even someone like Michael Saylor's having around, I mean, there's a very complex argument that's nuanced. Is he saying what he's saying because he has to? or is he
Sure.
saying what he's saying? Because like we all have to think adversarially here.
Totally.
As just Bitcoin, as humans, I would think like please go in your life and think adversarially about everything that's
I
happening around you.
love that you're saying that, because
You
I
know?
think that that's something that I've really like attached to in the Bitcoin space, because I didn't think anyone, not anybody, lots of people were doing it, but not in good faith. There's so much adversarial thinking that's just not rooted in, open source sort of public domain knowledge. A lot of speculation, a lot of schizo posting, a lot of things of just say, well, this guy did this and that, and kind of
Yeah,
loose
well, I don't know if we're
association.
owed any proper discourse because we're all doing this in the town square.
Yeah,
Like
true.
there's no sort of channel or like there's no guidelines, and nor should there be.
Right.
And so like we get what we can out of Twitter, and Twitter is not even the only like honestly maybe. And I'm not trying to promote community or not promote community. I like going to conferences. I don't go that often. I'd rather be with my
Sure.
family. I don't have a lot of time, but like, I think it's great.
Totally. Yeah.
I think people should buy stats first. I think it's great to meet
Sure.
people.
Of
It helps you
course.
gain conviction, find other
Totally.
people that aren't crazy, but like I don't, and so that's a complex thing too. But I think real life is more important than the conversation on Twitter, maybe. And maybe
Bitcoin is a means to an end, brother. Like, it's a means to an end. And I think especially when it comes to family and other things, like, and also just building, it's a naughty word, but sustainable things like for our lives. Like, no, like this idea of never sell your Bitcoin is insane. It's like, well, spend your Bitcoin on something that's going to give you a beautiful life. Don't spend 99% of your Bitcoin. But if you've been in it for a while and you see huge appreciation in some sort of way, and you can like secure a family home or a car that helps you build this, or a technology or a tape echo for your music studio, or a new guitar. I mean, like, give me a break. Like, it's money. It's the best money, but it's like it's money in that sense.
right.
It's a database. It's not tell the state it's money, but it's a means to an end. And so
Well, it's a tool.
yeah, it's a
and,
tool.
and we all are free to use it differently. And you could say sort of like the hammer, is predominantly used for like X, Y, and Z, but that doesn't mean that anyone can't use it for different things or,
Totally.
argue where the hammer might evolve to, even though I think that's sort of an end game or end product. But but just kind of thinking through all this, right? So like, what's coming at us?
Yeah.
You might agree or disagree with what people are saying. You might agree with some stuff. Giacomo is a very compelling person to me. I tend to agree with him over long periods of time, even if I don't understand what he's saying up front. But
Sure.
I
Okay.
always sort of like, there's always a new topic, and I always try to think critically about what anyone ever is saying. Doesn't matter what they said before. You might come in with more credibility or, but it's still maybe if it's a new topic or whatever. But I want to talk about this phase shift because I think this is a tool or a way to look at the world and the way information's coming at us. So you mentioned earlier Peter Thiel, I think you mentioned, was involved with Facebook, and maybe sort of Whitney Webb was alluding to how that's sort of like a military background to Facebook, a
Yeah, and
militarized background.
Palantir, right? I
And
know I want to get
Palantir.
into this question, but Palantir is basically, yeah. I mean, the CIA has basically left the public sector, and now it's in the private.
Right.
Here we
So
are.
so
So
I
anyway,
think
I'll let
all
you go.
these
I'll let you go.
guys, I
Yeah,
think all these guys from and I put everyone in the bucket before I'm going to take them out of the bucket.
fair
So
enough.
I think anyone, who's running one of these mega corporations with mega subsidies from the state, from Elon Musk to Zuckerberg to Thiel, and I'll throw in Dorsey. I can't imagine they're
Me
not
too.
in some way part of some sort of private public
Oh yeah,
partnership.
yeah,
And whether, and some sort of good cop, bad cop type thing.
100%.
And so what do you see sort of like, okay, I'll give you an example where, one you've kind of talked about, like where if you point out, like I try to be politically neutral in the sense that I think politics are important, but I don't think national politics in its current modern state are going to solve any of our problems. I think that
Yeah,
they're two horses in the same race.
false dichotomy. Yeah,
Right. But if you point out sort of like maybe what you don't like about one guy, then you're accused almost of being a fan of the other guy.
totally.
And so,
Yeah,
So what,
That
like, what
happened
do you
with
see?
COVID, bro. Did you
Well-
see that with like, I mean, I got called on one side, I got called a Trumper because I wouldn't get the vaccine. And then, but I'm not, talking to the other people. I'm like, but he was the one that did
Yeah, with
Operation Warp
Operation.
Speed.
Yeah,
Like, what
I
the
agree.
fuck? Anyway, sorry, keep going, bro.
So what is going on? What do you see in Argentina with Malay and vulture
Mhm.
capitalism?
Yeah, totally. Well, I think it's funny because we all know, right? We all know that it's a false dichotomy and red versus blue. It doesn't matter. The state hates you and all this stuff. And we're like very obvious about that. We see that. But then every 4 years, we fall for the same fucking thing. And we fall for this thing. And it's like, well, you're a Biden guy if you're not for Trump and this. And it's like, no, fuck them both. I don't care about either of them. They had their chances and, they didn't pardon Assange. Trump's cabinet tried to kill Assange, lock down the country, all this stuff. Biden's horrible too. I mean, totally corrupt. I have no interest in either of them. It's very easy for us to see, that there's a false dichotomy here and it doesn't matter. But then when it comes to the private public dichotomy, that seems to get mistaken as not being the same false choice, especially in the current era that we're in. And we're seeing, the intelligence operations of, the former public sector just entirely move into the public sector. Intelligence has always been very highly connected with banking, because intelligence leads to more profits. Intelligence leads to more control. There's a reason why these firms are doing these things. I just wrote an article called Debt from Above, also with Whitney Webb, about these dollarizer players, Howie Lutnick again and Steve Mnuchin, Marcus Galperin, and these guys, doing this Satellogic company, this surveillance company. It's totally, intelligence linked. But so much of the intelligence linked is through the new, private sector intelligence, including Palantir with just Peter Thiel, PayPal mafia guy, and Elon Musk's SpaceX. They have these huge amounts of, public sector contracts, but they're private companies. So we're seeing intelligence move into the VC world, into the private sector world. And we're seeing, the influence of, again, 49 times the, Geithner calls Fink, while dealing with this debt ceiling navigation, right? Trump brings in Fink right away to help with, the COVID stimulus. So, the bedfellows of private and public sector, have always been there. There's plenty of evidence to it. And then we see, when it's convenient, we see this push suddenly towards, why is Javier Milei speaking at Davos? Why the fuck is this like guy with this wacky right winger guy with this weird hair, all of a sudden all over the place, plastered over I've never looked at it ever in my life, but I guess theoretically plastered all over TikTok or whatever. Like what is this social media phenomenon happening where he's saying afuera and throwing away, different, cabinets of his government or whatever? What's happening here? Who is this character? Literally character. And he's this anarcho-capitalist libertarian presidential candidate, like in Argentina. This is so crazy. And then you actually look into, his like policies, and it's like, oh, I want to go find outside financing to dollarize the United States. To dollarize Argentina. Whoops. And you look at, so many of the people that he's, really connected with. One of his top advisors, Dario Epstein, is like really close with Fink and BlackRock. And, help BlackRock take, a huge stake in Argentina's kind of power monopoly, not literally, but kind of de facto, the Pampa Energia. Fink is right there, like basically the first couple weeks, he's coming in, meeting with Javier Milei. Argentina's this country that's had a lot of issues with debt, in the past with the IMF and World Bank. And, here's this guy coming in saying all the right things, all the right rhetoric, everything that you want to hear. Talking, he's cloning dogs, naming them after Austrian economics, economists, doing all these wacky, crazy things. But, he's based, right? He's red pilled. He's got a chainsaw. He's talking about how the woke, libtards and the blue hair and all this stuff, and where everyone's, but his actual actions are immediately, I'm going to sell, all the lithium rights to Israel, and just he's letting bankers come in, people connected with Goldman Sachs and coming in to like run the central bank he said he was going to get rid of, and creating basically an environment for, under this guise of free market capitalism, defeating the state. And he's letting all of these, vulture capitalists come in, including Larry Fink right away, to basically pick apart, a debt-ridden country already. I think obviously there's some experiment to be said about what Malay is doing there, and who knows, what exactly is going to happen. But I think that it's become a useful lever for the powers that be to push people like a Trump, a wacky right winger with funny hair, like a Malay, a wacky right winger with funny hair, to kind of push the rhetoric to kind of manufacture consent, to get rah-rahed by the rhetoric, and then let them sell the country out from underneath them, which is, I think, is more or less exactly what Trump did too. He says all the right things. He's hilarious. I mean, he's very funny. He's literally a TV actor, a reality star. But he had debt issues. He's a debt baron. He got, basically bailed out by Rothschild Inc. And here he is, heavily connected with, a lot of banker bros and Fink and a lot of these guys. And he's in the White House. It's really not that much different than Obama and Citigroup, kind of picking his cabinet and all these things. It's like, but it's convenient. The rhetoric is there. It's this pushback against the state. And there's this ideal of, the WEF, hey, we want to rebuild trust after COVID. And, we're so sorry. And, we're now going to platform people that are going to sit in front of a room and tell all these, rich people, how awesome capitalism is. It's like, well, yeah, they already did the coup. They already took all the money. They printed everything. They took the future of our grandkids and debased our grandparents. And they bought up all the infrastructure and all the land and all the minerals and sold it off. And now they're going to go and tell you how base the free market is. It's like, well, yeah, it's base for them. They just took all of it. So now you can come and you have no, basically, no lever yourself to establish anything. There's no bootstrap pulling here after they've hyperinflated your money and debased your family's wealth. And now they tell you, oh, things are going to be so good now. The free market's here. I'm sorry. We're in a world empire context. Unfortunately, I think a lot of this multipolarity is sort of fake, in the same way red versus blue is fake, and that the private public is fake. I think my China, my Russia, my US, I think we should have learned from COVID. There was a universal lockstep, world government, world empire context. And, there's different shades of it here or there, but it's there. And so to now kind of claim, the phase shift of this rhetoric towards, why is the, UFC champion or whatever, after winning the fight, the first thing he says, Joe Rogan's holding a microphone and he goes, I love private property. Read Mises, read the Austrian school. It's like, why is that being pushed everywhere? Well, because it's very convenient for these people that just, raided the cupboard. The Peter Thiels of the world and the Elon Musks and, these people that, made all of their money literally off government assets. I mean, they're welfare queens in so many ways with their 401k plays and their government contract plays. And here they are preaching about how the state sucks and free market's based, now that they've stolen all the, they raided the fucking treasury. It's very convenient for them. They want you to love private property. So in respect property rights, so you don't fucking raid their citadels and string them up for all the bullshit that they did. Right. So it's a very useful thing. And I'm not, just to be very clear, I'm not saying go do that or anything like that. But it's useful rhetoric for them. And I think a lot of people fall for it because we just want messiah so badly. We want heroes so badly because, things are tough. Things suck, for a lot of people. And COVID was horrible for a lot of people, even people that, were afforded freedom through certain things, and were able to, maybe stand up for some things or whatever. It still sucked. And I think people want messiahs. They want heroes so badly that they're looking, on the screens. They're looking in the front pages for them, and they see a wacky, right winger with funny hair saying all the right things, and ignoring the JP Morgan executives and people from the Macri administration, kind of cozying up to Malay and taking taking control over this, now free market. So yeah, I mean, again, hey, I'm not saying don't read the Austrian school stuff. I'm not saying Hayek isn't cool. Maybe don't clone a bunch of dogs and name them after Austrian economists, but I do think that, when you're seeing, we know the media is controlled. We know the narrative is controlled, the discourse is controlled. Not only is the discourse controlled, but the counter discourse is controlled. We're seeing, Peter Thiel and took Rumble public, or heavily invested Peter Thiel, into Rumble, and Rumble went public with Cantor Fitzgerald, which is again the same guy that took Satellogic public, the same guy that holds 80 billion treasuries for Tether, right? We're seeing counter narrative stuff being controlled just as much as the normal. The mainstream media, everyone knows that it sucks and it's dead. Well, the guys that they propped up in during the COVID era, a lot of those guys are just as bought. I mean, it's easy to buy people now. It's actually probably easier in the independent media realm. No one watches Fox anymore. Great. Well, we all watch podcasts. We all watch these things. You can pay a guy a lot less to capture him and push him towards certain things. It's a lot easier in the creator economy, right? So I think we just have to be really like, just eyes open and when you're seeing something, know you're supposed to be seeing it, and ask yourself why. And that doesn't mean don't trust your friends or your parents, or don't trust everybody, or don't get paranoid, don't get crazy. There are good people out there. There are good thoughts. Sometimes things do rise to the top and break the matrix. And, I jokingly refer to my friend Whitney Webb about this, that she's the ghost in the machine. And, she breaks the algos and gets all the view counts when saying all the things about how the algos suck, because truth does rise to the top. If you bring truth to discourse, I think it resonates with people. And the truth is that the matrix that they created to trap us into certain, discourse, they're stuck in it too. Malay is a TikTok president. Trump was the social media president, Twitter president. But we're on those same fucking platforms, and until they shut down the internet, basically, we can fight back using the same algorithms that they set up. We can fight back. There's a reason why there are some truth tellers that have resonated and can actually push back, because they're stuck. They've put out the net, and we're in the net there with them. And it's an arena, and truth does resonate and float to the top, when done right. And so, I took it as sort of a personal thing that I needed to kind of do this about Bitcoin specifically now, because I didn't really see that it was happening in a a highly platformed way. I'd see cool stuff. You have Joe Rogers on. I'd see people that are super based talking about things, how the state hates you, and that energy is always there. It's never gone. But I think I really do think that every single time you see something, you got to be really just. I'm not immune to propaganda. Like, I'm not immune to it myself, even though as someone who's so conscientious about what I think, and knowing that what I'm seeing, I'm supposed to be seeing, you still fall for things. But I've gotten better at pattern recognition. I've gotten better at, realizing that, hey, I've been let down by so many of these guys, like so much of this stuff and counter narrative stuff is so controlled, like a QAnon, right? It's like they put a couple nuggets of something cool in there, some truth in there, and then they cover it in 90% shit and tell you to trust the plan and not do anything. Don't get out of your house. We got a guy in there. Everything's fine. Well, it's not fine. And now 4 years later, everything's fucked up. No one's arrested. And the same people are still running everything, and everything sucks. Hey, you didn't learn from that. You need to learn from that. You were let down. No one's coming to save you. You got to save yourself. There are good people out there. Let them help you. Let them teach you. Figure out what lane you can resonate in and dominate and help people. and then let other people, platform those that are in their lane that, I can't teach someone about how to code or how, intricacies of HTLCs work or all this stuff, but I know, my friend Nifty can. So if she's running a show or a platform or a conference that does that, I'm going to promote it because she deserves it, because she can. There's certain things that I can say and be a heat sink for that other people in the space believe, but don't want to say and don't want to be that person. Great, I can be that person. So be concerning of what you take in. Know that whenever you see something, you're meant to see it. In pretty much the mainstream and the independent media, and social media, these algorithms and platforms are controlled, and they're there to manufacture consent and garner basically emotional reactions. They've learned how to manipulate individuals with emotions, but whether it's fear and that's simulated or real, they can kind of generate desired outcomes from individuals. There's lots of studies on this. I think they're doing it to the masses in a lot of ways. And so yeah, be wary of that stuff. When you see a character like Malay, screeching about the free market, why is that? Why is he in front of Davos? Like, if that didn't raise any red flags, I think like you really got to go get an oil change. You got to you got to check yourself on that one. Like, obviously, that shouldn't be happening. If he really was this anti-state, anti-globalist character, he would not be speaking at Davos. Let's be honest. So why is he there? Why?
I saw the same thing when Bernie Sanders was platformed heavily on Facebook and Twitter. And I was like, why is he always coming up in the feed? And then same thing with Malay. I'm like, if they really hate this guy, if he's really saying these things, they would squash him. Totally. And we wouldn't even be hearing about him outside of Argentina. It's not our. Why are they giving me this information? Why do they want me to see this? Why do they want me to root for this guy? Or, when I say me, I mean someone like me or someone that they think is like me. And I'm not trying to say I go right or left. I'm just right. But they're trying to give you the counter. And I think what you're saying there too is like, or I don't know if I'm adding this, but I think we've been all primed with predictive programming to want heroes in politics, to want this to be a team blood sport, to want this to be ghoulish. I think it's kayfabe, like you were talking about before. It's all fake and the age-old art of politics. And so the last couple of things I want to bring up for the evening, those, talking about this phase shift. It's interesting with Thiel. I mean, you go back to Facebook, and I can't help but think, I mean, the whole story is bullshit about Parker meeting Zuckerberg,
the social network.
The movie's fantastic. I love the
great
movie. It's one of the best movies of that decade.
Great story. Yeah.
I think they're selling us that story for a reason. And they want us to think that Zuckerberg is the boy wonder genius that did this solo. If you notice, all these companies that have tremendous influence in global techno communications, financialization, I mean, they're all ran by boy wonders, more or less. And that, I think, is because they're installed and there's control. And but that's what I'm alluding to. So, but it's interesting with Thiel, because after Facebook, like you said, there's Palantir, there's it's very interesting. I think Whitney Webb mentioned that he's a lot behind Tucker Carlson, which I think is sort of this newfangled media that we're meant to think is independent. That's not really independent. It's just usurping the three networks. I mean, they're just basically taking Twitter. Let's call it like Twitter, Netflix, and iTunes is your new ABC, NBC, CBS, like whatever three there is, or 4 or 5. And I think it's interesting that Thiel's behind Rumble. I didn't know that. I think UFC is another one that's really interesting that you call out, because it's like, why are they giving Dana White so much platform to say these the kind of things he does, and why wouldn't they take him down? I do think they're positioning UFC as America's sport, sort of after the fall maybe of the NFL, because that's gotten so WWF style. I don't know about that. And I don't know how much what you thought, but I mean, it's like this Chainlink thing and the Oracle problem, but you dangle Eric Schmidt out there, and I always wonder, like, is Chainlink different in the grand scheme of things of cryptocurrencies? Not saying it's a legitimate project or anything, or I don't know, I don't think it is, or that solves the Oracle problem, but having a name like Eric Schmidt attached to it makes me think it's in their plans somehow.
Well, because I mean, to make this blockchain economy work, you need to, smart contracts are dumb. I mean, that's a great name, but they're dumb, and they need data fed into it. So you have a system that, is like, hey, we are the Oracle. It doesn't mean that they solve the Oracle problem. It just means that they are
a Oracle. Well, so that gets me into I mean, because the article starts out, or we talked a lot about Think, BlackRock, and ETFs, but this is really, the article to me is really way bigger than that. And that's not to diminish any of that, but it's really about, the Think, BlackRock private privatization of two things, this tokenization. And I think this goes, what's interesting about this article is it goes way beyond, we're all going to get stocks with a QSIP. This is the universal ledger. So we get a QSIP, I think, in this story.
Oh, yeah.
But also what goes beyond this is that, this is, airport terminals, canals, waste, railroads, renewables, power grids. All of these things will get fractionalized and collateralized like mortgages. And I think one of the quotes in here is, nature is the new gold. And what I think this is getting at is nature is going to back all these public-private partnerships. I mean, Fink goes on to talk about this. How are we going to fund these projects we need to do? The governments are out of money. Yeah. And the people that own the governments want more, that they want our money now and our future money, or our resources or really our hard assets, probably. And our identity. Yeah. I mean, am I wrong here? Is this?
No, you're totally right. And our follow-up piece to this was about a private intelligence company building a satellite company to basically feed the data into the smart contracts, solving the Oracle problem, feeding the data into the smart contracts to uphold green finance. You need a satellite that says, hey, you cut greenhouse reduction, you reduce greenhouse gases, 30% in your 8th year. And so now you get the 1% coupon, blah, blah, blah. This idea of tokenizing Earth, is very much so in line with what these guys are building. That Fink was an ESG guy, not because he wanted to save the planet, but for profits. I mean, he literally says that. And the other side of profits, of course, is, very interestingly enough, and you want to talk about phase shift, but, RFK Jr. and his whole campaign and, his VP pick is this woman, Shanahan, who very interestingly enough is married to the former VP of Lightning Labs, which is, that does Taproot Assets, which is putting USDT on Bitcoin and on the Lightning Network. But anyway, one of her, theses in postgrad at Stanford was about using blockchain to be essentially the enabling environment for quantitative easing via carbon credits. And so if we create more dollar-denominated liabilities via tokenizing nature, we have more places to stuff debt. And I think that's a huge part of this is like they've run out of places, to stuff debt. It used to be oil barons, right, are digging up in the ground, digging up the earth, trying to find oil. Well, now that we've, flipped everything around and it's all about, fiat money, it's like they're digging holes to shove dollars into now. It's like the total opposite. They're trying to bury debt in as many places as possible. And really the only place kind of left unexplored, they've done mortgages, they've cut up everything. It's human capital and it's real world assets. It's the rainforest, it's wheat, it's the oceans, it's the CO2 being emitted from these things. So, there's a legitimate push, by these people, to tokenize the earth. And if they can ETF a Bitcoin, there's no reason why they can't ETF, the rainforest. They can't ETF the infrastructure in South America, the rainforest in South America. They can't circumnavigate the state and create real world asset-backed stablecoins, commodity-backed stablecoins. The state and the central banks are out of favor, and now it's time for the private market and the capitalism to save us. Well, how do they do it? They do it by controlling real world assets and infrastructure and making them dollar denominated and shoving them onto this universal ledger. And these people are building out. Again, like Steve Mnuchin and General Dunford, Howie Lutnick of Cantor Fitzgerald, and Marcos Galperin, who's the richest man in Argentina, and he runs Mercado Libre. All four of them are on this Satellogic board, which is this private satellite company whose their literal catchphrase is observation is preservation. And they are building an Earth observation company to offer, surveillance as a service to private and public entities, to Paraguay for their, for some regional green play that they're doing, to oil companies that want to surveil their pipelines, and doing it with an airplane costs $700 an hour, but doing it with a satellite is 60. It's all about surveillance. It's all about control of the natural world. And then how do we find all this data and shove it into this universal ledger, and denominated in dollars? These are wacky ideas, but they're building these fucking systems. They exist. And there are these huge players that jump in and out of the private and public sector whenever it's helpful for them. I mean, I think the Trump administration is very interesting. Mnuchin's very interesting. He was there in the Treasury when they printed trillions of dollars, and the Trump he's a One West guy. He was a big part of the 2008 profiteering. Guy that worked under him in One West was Brian Brooks, who's the former VP of Coinbase, who got hired as the OCC, basically the head legal lawyer of the United States. He signs a legislation that says banks can hold stable coins. He says banks can hold crypto assets. And then he's out, and goes right back to the private sector. He's at Bitfury. He's at Binance USA for 2 seconds. But they did what they needed to do, and then they got out. There's a letter from Kushner to Mnuchin where he sends a blog post that Sam Altman wrote of OpenAI saying, hey, check out this, USD coin, this idea of a US dollar denominated stable coin. Like, what do you think about this? Well, it's in the public record, there's this email. And that's exactly what they did. USDC, as we know it today, that what didn't exist at the time. But they were literally talking about creating a US dollar denominated stable coin, while in the public sector. As soon as the public sector no longer is useful for them, he's running Liberty's Strategic Capital, I think is the name of the VC firm, and he's the chair of the satellite company that wants to observe the earth for preservation. Like, give me a fucking break. What are they doing here? And so, as the PSYOP cycles compress, and as the private public revolving doors compress, and they go from, instead of being 10 years, decades, they become 6 months, 18 months. Larry Summers is the head, running the money for the United States, and then he's running Harvard, or Robert Rubin is running money for the United States, and then he's the head of Citibank. As these cycles compress and they get closer and closer, we have to notice, and hopefully do something about it. But I think noticing, talking about it, as it gets more desperate, and as the shifts happen quicker, as these cycles compress, it's easier to notice. But yeah, I really do think genuinely they need a place to shove all this debt, and the best way to do it is to move into the natural world. And these ideas of green finance and green bonds, natural asset corporation, these are all things that have been discussed, for years by a lot of these players, by Larry Fink specifically. And we're seeing the infrastructure being built out for it. And we're seeing blockchain, which I know is a nasty word in the Bitcoin space, but it's basically becoming, the new enabling environment for these types of systems. Back in the day, if you didn't want to do a green bond, that pays out, a certain coupon after 8 years, if you've reduced your carbon credits, you need an accredited, litigator to settle the terms, to write up the terms. You need an insurance broker. You need a carbon credit registry. You need a bank on either side to put up the collateral, or what, you need all these parts. You need a court to settle it. Basically you need the public sector working with the private sector to be the enabling environment for these crazy, cleverly authored bonds. You use blockchain and, some sort of oracle that, feeds the data into this settlement network. The assets settle, for $5 or whatever. You save insane amount of basis points on these $1 billion, soon to be, I'm sure, $1 trillion bonds. Blockchain kind of becomes the new enabling environment. There's a reason why JP Morgan is, doing the token collateralization network, or whatever it's called, the TCN with BlackRock. there's a reason why they're doing JPM coin, why they're doing their Onyx system and settling trillions of dollars and, tokenized securities. Like there's a reason why they're moving to blockchain. And it's for costs, and it's for, basically removing the public sector out of it entirely where you don't even need it. You can settle all of these wacky things just with the technology. And so, yeah, I think they're using, blockchain as a way to, collateralize the debt, spread it around, fractionalize it, and create more of it. And they can connect it to real world assets. If they control the oracles and they control the infrastructure and the private blockchains, and they get, basically, at first anyway, they get agreement from, the private sector ghouls that are their cronies that are in there. And it seems like they've more or less established the enabling environment of the world empire context has been here. We saw it with COVID, proved dollar denominated liabilities blow out the wazoo. Trillions of dollars are printed. Now that money is going to flow. They need to print more. They need more places to shove dollars. They've run out of holes. Here's the rainforest. Here's the ocean. Here's your backyard. Here's your cherry tree. They're putting it on the ledger, and you can thank Larry for it. Yeah, I mean, that's more or less where I see it going. And I think Bitcoin plays this role where it's the only thing that isn't digital debt. It's digital credit. And so it plays this interesting yin yang role where it acts as a heat sink. So as the debt goes out everywhere and your CO2 emissions become dollarized, the Bitcoin just rapidly just sucks that all up and becomes basically the vacuum for the bubble that is, the debt system.
Yeah. I mean, yeah, this has been an incredible conversation. I think I have more to think about coming out of it than I did coming in, which is good. I think it's going to inform some of the follow-up conversations I have planned in the coming weeks. I do want to please allow me to read a little bit more before we round out here. So it was no surprise then that just 3 years later, Trump would be employing Fink once again to manage the stimulus distribution programs alongside former majority BlackRock shareholder Bank of America. In quotes, I do believe it's going to continue to bring opportunities for us. Fink stated during a 2020 earnings call, referring to government assignments, as if predicting the coming profiteering off the unprecedented government lockdowns. In a 2011 interview with Bloomberg, Fink went so far as to say, markets don't like uncertainty. Markets like, actually, totalitarian governments. Democracies are very messy. I mean, it's interesting, over 10 years ago, the guy's not really pro-democracy. And I'm not saying that I think democracy is the end game for humanity and the solution, but I don't think he's coming at it in the freedom-loving way that maybe I am. I want to go on to read a little bit more. Some companies have already moved to tokenize these natural assets to facilitate and accelerate their financialization and fractionalization. For example, the Estonia-based venture capital firm Single Earth tokenizes land, forests, swamps, and biodiversity, any area of rich ecological significance. Companies and eventually individuals, they promise, can then purchase those tokens and own fractional amounts of those lands and natural resources, getting carbon offsets in return as well as ongoing ownership rights. These tokenized forests and other natural assets serve to back Single Earth's proprietary merit token, which has been framed by outlets like Forbes as more legitimate than both fiat currency and Bitcoin. The company's goal is to make nature the new gold by monetizing it for just being there, creating a fascinating combination of environmental impact and financial profit. Some national governments have already made plans to tokenize their land and natural assets, namely the Central African Republic, one of Africa's most impoverished countries. The CAR has been working to tokenize its land and natural resources, including timber and diamond reserves, since 2022 and passed legislation last year to advance their efforts. The initiative hails from the country's digital currency hub known as the Sango Project. In addition to the efforts to tokenize natural resources that have never been before part of the financial system, the push to tokenize the most well-known natural resource commodities, for example, oil and gas, has also advanced considerably, with several companies having developed platforms for trading tokenized oil and gas reserves. Renewable energy sources are also increasingly a target for tokenization. Other VCs, such as Union Square Ventures, have written about the mass tokenization of natural assets from a different perspective. Instead of the more common claims from groups like Single Earth that tokenizing nature will have saved the planet, U.S. V sees tokenized natural assets as soon forming the basis of a new type of digital collateral that could be used in lending, insurance, stablecoins, and other on-chain financial products. They suggest that a new stablecoin could be backed primarily or maybe entirely by natural assets. In January of last year, one of Australia's largest banks, National Australia Bank, announced its plans for a green stablecoin in partnership with an agri-tech company called Jura. The stablecoin, characterized by the bank as a tokenized deposit, is poised to be used in carbon credit trading activities and will utilize blockchain to verify green assets that back the stablecoin. The ambitions of the partnership are apparently larger than just their green stablecoin. For instance, the bank's partner in this endeavor, Jora, envisions a future where tokenized agricultural products, aggregate assets, land holdings, prospective harvests, etc., are used as loan collateral, while the banks plan to use blockchain to track that borrowers comply with green covenants of their agri-green loan offerings. Jora's vision for the future is in fact already here. A Visa-backed company known as AgroToken describes itself as the first global tokenized infrastructure for agro-commodities and offers stablecoins tied to grain grows in Argentina and Brazil, urging farmers to tokenize your grains and pay anything you want. Farmers can then exchange their agro tokens for seeds, vehicles, machinery, fuel, services, and even use them as collateral for loans. Already existing stablecoins such as Celo's dollar and euro stablecoins have already invested a considerable portion of their reserves in tokenized natural assets such as rainforests. The Celo network is also partnered with the aforementioned company Flow Carbon in order to create the first liquid market for live carbon credits on-chain that is designed to make carbon offsetting widely accessible and transparent. Celo also recently announced a partnership with Circle, whereby Circle's USDC stablecoin will launch natively on Celo and is poised to become the network's gas currency. Celo, backed by Jack Dorsey's Block, Reid Hoffman, Coinbase Ventures, and Andreessen Horowitz, among others, has been open about its ambitions to become one of the main blockchains for tokenized real-world assets, particularly tokenized natural assets. For instance, Celo co-founder Renee Reisenberg remarked the following after the Flow Carbon partnership was announced. From the start, we designed Celo to bring natural assets on chain in a meaningful way to enable a regenerative financial system. Larry Fink goes on to say on Bloomberg Television, we believe we're just halfway there in the ETF revolution. Everything is going to be ETF'd. We believe this is just the beginning. ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. I mean, it's obvious that they don't really include Bitcoin there front and center. It's just a building block towards the rest of this. I mean, there's programs like the UN has a document entitled People's Money, Harvesting Digitalization to Finance a Sustainable Future. Microsoft and their blockchain-based identity program. I mean, all this, it sounds absurd to me and unrealistic, but these guys are plowing ahead and they seem to take themselves very seriously. And they seem to get some stuff done from time to time. I'll leave it to you for any final remarks. I mean, there's just a lot coming at us here, it seems like.
A huge amount coming at us. I think that there's
I think I
much
lost
here.
I lost. I think, did you hear me there the whole time?
I heard you the whole time. Yeah, it sounded great.
Okay.
There's so much coming at us. And I think, so I think, again, there's a, it depends on what you subscribe to and whatever, but I really think, let's get a little esoteric here. I think that there's something to be said about, the karmic law that these guys kind of feel like they have to operate under. And I think that they have to feel like they have to explicitly say what they're doing in order to, feel comfortable doing what they're doing. Whatever it is, I don't care what system you subscribe to, but there seems to be a pattern of these players, very upfront saying exactly what it is that they plan to do, but generally, usually in these like little hidden corners, little conferences here or there, these little a lot of these, clips and these things that a lot of these quotes are from are like YouTube videos that are like unlisted that have like, a few hundred views or whatever. But either way, they say these things out loud. I'm not sure exactly why, unless it has to do with some sort of karmic thing or whatever, but they say it. And I think, they say it very, very out front. And this information is there for us to pick apart and kind of piece together. And I think you really can put together, you start to look at the piece I did after this with Whitney again, this debt from above, looks at a lot of these players. It looks at Reid Hoffman, considerably, who was, PayPal Mafia guy, the LinkedIn guy. He was led the seed found for Blockstream. Interestingly enough, Blockstream, a lot of employees that were working for them, Adam Back sort of famously, but a couple other people and some people not working for them, I think it was October 2014, they come out with the sidechains paper that basically introduces this idea of how to create, side chains that, can bring assets, back and forth, from Bitcoin and allow you to, do kind of other things, on top of Bitcoin, using the side chain. A month later, Reid Hoffman, leads this round, and they get a whole bunch of money to, so basically they proved, mathematically that they could create these systems. And the paper comes out, and then they're being funded by the PayPal Mafia, quite extremely. And again, everybody loves Blockstream, everyone loves Adam Back, all this stuff. Sure, very nice guy. I don't really get upset at the people. I get upset at the mechanisms. I think the businesses are less important because they can swap them in and out, but it's really the mechanisms that I care about. I wrote the Bitcoin dollar basically not naming any names. It's really just about the mechanisms. It's similar to the petrodollar. You create a monopoly basically on the on and off ramps for an energy commodity. They did that with oil after, the Nixon shock, and, immediately we go into the Middle East and, create this monopoly for oil. You want to industrialize, you need oil, you got to buy dollars first. We've basically done that exact same thing for Bitcoin. That's the Bitcoin dollar, right? I'm not going off about, this guy is the money behind Tether, the banker is this guy, and there's Joe Lewis, and I don't even go into any of that stuff. It's really just about the mechanisms. I'm going to get into all that stuff later, but I really didn't do it. I left it sort of open. So, but you look at kind of the mechanisms that are being started here, and you can see that there's like people building, side chains, altcoins, dollar denominated stable coins that uphold the U.S. Treasury Ponzi complex, which is what keeps the military industrial complex of the United States alive. They're building these infrastructures and the technology and manufacturing the consent, maybe more importantly, to build these systems to digitalize and tokenize an ETF, the whole world, and saying it out loud. And I think that, step 2, Larry says, is the tokenization of every financial asset. Well, what's step 3? Probably to turn everything that isn't a financial asset into a financial asset. Because now that they have these infrastructures, they can tokenize anything. And that's sort of the idea, obviously, behind the name, Tokenized Inc. Here they are. Also, it rhymes with think, I guess. But here they are. They're setting up the infrastructure, and they're building, the consent for it. And yeah, it's really interesting that once you do start to pick out the VC stuff, the venture capital is in many ways, a private intelligence in its own way. There's so much money to be made in intelligence. There's so many things beyond dollar denominated intelligence when you basically own payment rails. I think it makes perfect sense that, these guys went after PayPal. They went into all these other things. They went into LinkedIn. They went into Tesla. They went into Palantir. They went in, they took the CIA into space,
They've been way too successful for entrepreneurs, though. Each one of them has struck $1 billion twice. Very unlikely.
Extremely unlikely,
including the Winklevoss twins.
Yep.
But, and I'm sorry to cut you off there.
No, but I mean, and then you look at, who was part of the money behind PayPal? And, there's this guy, Bill Elkis, who, was led their Series B. And that guy started the Jeffrey Epstein Foundation in like 97. He was the co-signer, right? I mean, you start to see, all these guys ran around with Epstein. It's like, no one wants to talk about Reid Hoffman and Thiel and these guys being associated with Epstein and Musk. But they all were. Epstein himself has talked about Bitcoin. No one wants to talk about that. Epstein himself basically said the same thing. He's like, Bitcoin's a great, not really a currency, but it's great for asset storage. More or less said that in this like kind of one interview about him. These guys were using Bitcoin Thiel and this crew has been in Bitcoin, for a very long time. He jokingly said, his biggest mistake was not going more into Bitcoin. And when someone asked him who should be the next Fed, he said Satoshi Nakamoto. These guys know what Bitcoin is. Reid Hoffman, someone asked him, hey, you're really excited about blockchain and Bitcoin. What's the Google of Bitcoin? Who's the person building this? And he's like, well, Bitcoin, or blockchain is kind of like the new internet. It's kind of tough to say, but if I had to pick, I would say Blockstream. They're the Google of blockchain, and they're building Liquid. They're building this federated sidechain that is heavily tied in with Tether, heavily tied in with Bitfinex. Bitfinex has a big hack, and the hackers, lose, six figures, in BTC denominated Bitcoin, and the DOJ has it, and they're perpetuating the U.S. Treasury Ponzi more than just about anybody, and they've onboarded the FBI and all these things we've talked about. You're starting to see, you piece together these connections. It's it's very disturbing, I would say, honestly. And then you look at, the connections between Coinbase, being the custodial partner, for all of these, ETFs, and BlackRock's connection with USDC. Who's holding the paper for USDC? It's BNY Mellon, who is like a digital dollar partner for the Fed in New York. They're also like literally Alexander Hamilton's bank, formed at the, start of America. It's like, it's very weird. Then you go to look into, okay, how did FTX collapse, which I would argue was sort of the pillage before the founding of the Federal Digital Reserve. I haven't really written about this yet, but I'll release some alpha here. The reason why the Terra Luna collapse happened was there was this protocol called the Anchor Protocol that was like giving out 20% plus yield. 72% basically of all Terra was in this protocol at the time of collapse, and the guy that created it was a Peter Thiel fellow, this guy out of Korea. So he basically created this whole infrastructure to let's demonize algorithmic backed stable coins, so that no one is able to use Bitcoin to make dollar instruments in the future. Now we got the Lummis Hillenbrand, stablecoin bill that's about to come out, and it very specifically calls out, in her tweet thread talking about it, she says, in the wake of the FTX collapse, algorithmic stablecoins, and they ban algorithmic stablecoins, or they're attempting to. They're basically trying to remove any ability for private capital to go into the people's hands, and they're putting it back into these controlled, arguably intelligence operations, private or public intelligence operations, but intelligence operations, and keeping private capital in there. JP Morgan heavily connected with Epstein, Epstein, yeah, of course. Jamie Dimon heavily connected, served in the USVI court case. So, there's a whole bunch of spooky stuff when you're looking at, a lot of these huge players in the private capital game. They all understand blockchain's important. And yeah, it looks like they're beginning to make a play basically on the natural world. Interestingly enough, quick little aside, also going to write about this. There's two members of the Paxos board, which is the group that does the infrastructure for PayPal's stablecoin, PYUSD. There's Bill Bradley, and there's this guy, Jim Mancy, I believe. Jim Mancy is his name. And both of them were board members on this East Coast company called Cargometrics, which was run by Scott Borgerson, who was the alleged husband of Ghislaine Maxwell. And it was basically the first kind of Satellogic, where it was a surveillance company of the oceans, and they were surveilling, shipping containers and cargo ships, and basically doing, this high, resolution surveillance on the oceans for shipping lanes. And then they turned into a quant trading desk, because when you have information like that, you can see where are all the world's assets going. When you have total control over the informations of the shipping lanes, you can see when wheat is being sold to this party, or this company is working with this person, or this country is working with this person, and all the things you can't read on, the Wall Street Journal front page. You begin to sort of pick apart, and you see, where all the big movements happening, where all the assets are going. And when you have that information, you can make plays on on currency stabilization. You can short the fuck out of countries that are exporting, unhealthily. You know when countries are really strong, and there's so much money to be made there. That was kind of the big thing that Epstein was sort of doing. I mean, he's really a financial hitman. His connections with Bear Stearns, Goldman. He has all these connections. Everyone, he's being painted, sort of as this, human trafficker, child, all these things that are true, but that really wasn't necessarily what he was doing. It was sort of blackmail and control for these much bigger, profit driven intelligence operations, blackmail operations for financial firms. And these same people that were connected to all these guys are now basically recreating the Cargometrics model, in space, which is the Satellogic company. And two members of the board that were on Cargometrics are now on Paxos, which is the PayPal stablecoin company. That I don't know, it's just a little weird. And you're seeing these same mechanisms be set up, these same financial surveillance companies being set up. And they all really love Bitcoin for some reason. They're all been early adopters of Bitcoin. I think there's something to be said about that. And again, it's not blackpilling. There's a lot of stuff to be blackpilled about in there, but I think it doesn't mean Bitcoin is a failure. I think it means almost that it is what we think it is. It is a really important mathematical anomaly that is this very important tool that empowers everybody that uses it. Bitcoin is for anyone, not everybody, right? Well, it's for enemies, and our enemies have it, and they're very empowered. And we need to let's leverage it to create a freer world and to push back on these people, and point them out. Point out that these investments in these mechanisms that sure, a lot of discourse is captured and paid for by Tether in the Bitcoin space, but a lot isn't. And there's a lot of conversations we can have, or we can openly talk about it. Doesn't mean that everybody that works at Blockstream or Tether or whatever is like a bad person. Like, I'm sure there were great people that work at CeeLo and Coinbase, and just like there were great people that worked at Cargometrics, that just so happened to be heavily connected with Maxwell. I mean, it's just true. So, right. Yeah, eyes open, follow the money. Yeah, I mean, let's see what happens here. I've kind of been saying for a while, over the last few months, that I really think that this is kind of the most important year in Bitcoin in a really long time, maybe in the last 10 years, because of the Wall Street adoption, and in this very important geopolitical time, an election year. We're seeing a rhetoric phase shift towards the free market. Those are all signposts, I think. Bitcoin, I think, is what we think it is. It is going to play a big role in what's coming up. I don't think these big things that have happened around halvings are coincidences. I don't think the regulatory arm moving the last couple of days right after the halving is a coincidence. I think we should buckle up and get ready for a hell of a fight, because it looks like they want to tokenize the fucking world and shove it on a ledger. So, let's try to make it not the Bitcoin ledger. And let's try to, keep the ledger permissionless, for the next 7 billion people. And then we can win, I think.
Yeah. Wow. Talking about these characters and sort of how Fink thinks that, this universal ID and ledger is going to eliminate corruption. Obviously, we probably see eye on that. They're the kings of corruption. I mean, these guys are gangsters. They've been fined, Bank of America was fined the largest fine, I think, it relates to great financial crisis, about 17 billion. Yep. It's interesting that SBF, Sam Bankman-Fried, came out of Jane Street, and JP Morgan are authorized participants. Yeah. And, you talk about a lot of this, follow their actions, not their words. I still can't believe, I think it's incredulous that Elon Musk pretends to not understand Bitcoin. He understands PayPal. He's trying to form the Everything app. It's all related to payments, currency, all of it. Andreessen, didn't he invent Netscape? And I thought this guy, when I came into Bitcoin and crypto, and I didn't understand the differences. He was someone I was like, wow, this internet guy who lost the war to AOL and is going to come back this time and figure it out and build the real internet. And like, so I kind of, that to me gave a lot of credibility to a lot of the, which I think he's just a shitcoin factory and using Coinbase for, portfolio distribution. And it's interesting, Brian Armstrong, how this guy, and all of them, you look at Hoffman and a lot of these guys, even Bill Gates and Warren Buffett, they said nice things about Bitcoin very early on. Like you said, they do get it. And then they change their tune. Brian Armstrong's another one. It's like, how are you not going full blown 100% Bitcoin if you get it the way I've seen you talk about it in the past? So, we talked about Epstein. It's like this guy, you think about him, I think about this doofus henchman running this evil, thing. And I in that light, I don't think of him as the boss. I think, he's one of many probably in that kind of role. But then you hear about him, funding MIT, and he understands blockchain and Bitcoin and shipping lanes.
He
and
tried to give
trading.
money. He tried to give money to Elizabeth Stark, and she infamously said no. Like, he tried to fund Lightning Labs, and she said no.
I mean, this guy seems to be everywhere, and he seems to make a lot of smart bets and has very good intuition about where the world's going. It's very strange.
Yeah.
But, and I wonder if maybe Maxwell is his boss. I have no idea what's going on. But on one hand, the guy seems to get it all and is like pulling the strings and is in the cabal or whatever you want to call it. And on the other hand, it's like, no, he's just one of the henchmen and one of the faces, and he's expendable, and he doesn't matter. And I don't know. I can't get those two things to reconcile. Before we round out, I just want to read this. So, the phase shift in political rhetoric the WEF has started platforming and promoting, exemplified by Milei, should be noted. Does Klaus Schwab suddenly not care about digital identity and programmable money? Did Fink wake up recently and decide carbon credit scores and typical ESG narratives are no longer worthy of promotion, despite the innate control over the masses it gives to the infrastructure's maintainers? Libertarianism, anarchism, and capitalism have become meaningless partisan buzzwords to guide the partially aware right towards promoting the corporate and corrupt capture of the public sector by the private. Hooray for the free markets, they cheer, as Milei places an ex-JP Morgan and Deutsche Bank executive in charge of his central bank and reaches out to outside financiers to further dollarize Argentina. Down with socialism, they cheer, as private sector companies spread the treasury Ponzi across the global south with stablecoins while tokenizing their land and natural resources. You will allow BlackRock to build the panopticon of tokenized earth trademarked, with Americans' retirement money under the dialectic pretext of owning the liberals, unknowingly connecting all aspects of ownership to centralized databases, walled identity gardens, and fractionalized reserved assets transmitted and issued on the private blockchains of Wall Street banks. The warring factions within the Davos socialites squabble over the spoils, but never against the plan. Fulfilling Agenda 2030 requires complicit cooperation as much as compromised corporations. Do not confuse free market capitalism with cronyism or cartelism, which is the capitalist model embodied by Fink and his fellow Wall Street ilk. The new tokenized economy must be created under the guise of free markets, leading to newfound prosperity for individuals, and not a digital serfdom paved with misunderstood user agreements, biometric credentials, and faux collectivist talking points. Take a selfie and submit your social security number alongside your date of birth to unlock the now tokenized old growth forest in your backyard. The new face of economic freedom is your face, alongside select credentials sent to a privately owned database, one ledger to rule them all. Your existence reduced to a JSON string, and your worldly possessions regulated and demarcated by QSIP, but at least you got a few half shares of BlackRock's latest Moss on a Rock ETF. The for the greater good narrative of the post-Occupy liberal economic backlash has lost its usefulness and is being replaced in real time with tokenized private capital libertarianism. This is corporate capture down to the molecule, a ledger entry for the protons in the new and improved fractionalized atom, courtesy of Larry Fink and his Tokenized Inc. Yeah, man. Great piece of writing. I guess how did you say it? I said CeeLo, like CeeLo Green, the rapper. What was it, Cello or Cello? I have no idea.
I think it's CeeLo. Yeah, I think it's CeeLo. Yeah.
I have no idea. I think I said it wrong. Maybe I was saying Cello instead of CeeLo. It's hard to get all these names right when you only read them. Mark, I want to thank you for coming on the show. I'd love to have you back, get into some of your other articles as well. I'd love for you to send me your book and dig into that. I think that'd be fantastic. So
I
we definitely got to think
absolutely-
adversarially and, I critically. So I'll leave it to you for any parting words and let people know where they can find you and your work.
Yeah, man. Hey, thanks so much. Yeah, incredibly fun conversation. I had a great time. Would love to come back anytime. Definitely send you a copy of my book. There's a lot in there for sure. Yeah, man. I think you said it great right there. Think critically. It's important to not, don't let the fear in. Don't get black pilled beyond the point of being able to do anything. I get accused of that sometimes, of being this doom merchant and all this stuff, and it's just ridiculous because I'm just not that. I'm just not an idiot, and don't want to be controlled by psychopaths. So that's why I do what I do, and again, all of this stuff is a means to an end. Bitcoin especially. And so, find the good life, it's out there. They can't tokenize, your happiness. They can't tokenize your friendships and your family and all that. So, and don't let them tokenize the things that they're going to try to tokenize. So, there's a lot of war left, a lot of battleground left that they haven't won. I really think the revolution is an internal thing. It's removing yourself from these systems and living a good life. And you can do all that. I believe in you. You can do it. You can find me obviously at Bitcoin Magazine. Check out the print mag. Been running that for a couple of years. It's a product of love and sweat. And check out the Bitcoin Dollar. You can find it at Bitcoin Magazine. It's also on Amazon, but Bitcoin Magazine. And you can find me on Elon Musk's WeChat USA, on Twitter at Mark Goodw _IN. Yeah, man. Thanks so much for having me. I had a blast.
Yeah, man. Let's not let Bitcoin get hijacked. This is fuck you money and an anti-state revolution. Let's keep it there. Thank you so much. Peace. And that's what's up this week with Mark Goodwin on the Bitcoin Matrix podcast. Get up to $100 when you sign up and buy Bitcoin at partner.river.com/matrix. Get your sats off your exchange and secure them with the new standard in Bitcoin multi-sig security. And get 6 months free when you download the app at thea.us/Cedric. You can support the Bitcoin Matrix podcast directly with a boost on the Fountain app and by writing a 5-star review wherever you dome your pods. That would really help me get the word out and help new listeners to find the show. And thank you for tuning in. Keep building, keep stacking, and always be laser focused out there. This is Cedric. Peace.